guys so much for tuning into today's live stream. It is June 12th, 2025. And to begin today's live stream, I do want to take a look at the economic calendar here with you guys. So we have core CPI, this was yesterday, core PPI and unemployment claims here today. PPI actually increased by 10 basis points. And last month, PPI was declining in prices almost, but it increased again. It's back to increasing by a very small percentage, 10 basis points. Unemployment claims, previously they were at 248,000, currently still 248,000, holding steady. And the 30-year bond auction is taking place in about 3.5 hours. Yesterday we had the 10-year bond auction, and let's see, previous 2.6. So I don't know what that second number means. Let me ask ChatGPT. This appears to summarize yield to bid to cover ratio. So the yield is the first part. This is the high yield. Indicates stronger demand. So the bid seems pretty okay. Higher, so it's weaker demand, higher yields. So from compared to previous month, it appears that there was stronger demand here, 2.6, and the yields were lower, but now the demand is lower, 2.5, and the yields higher. This isn't really good for the bond market. We do have the 30-year yield here coming up soon, so we'll see what that looks like. But coming into the actual markets here, it appears to me that we have already taken out the daily low. So this is the daily candle from yesterday, right? And with the way that we closed, the easiest assumption for me to make was I didn't know if we were going to take out previous day high or previous day low, right? Previous day high or previous day low, I couldn't really determine whether we would take out the lower or high based on how we closed. So knowing that, I was just going to stay patient, right? And eventually during the agent session, we did end up taking out previous day low, and we crossed that. Previous day low is that blue line right here, and prices traded past that blue line. So that means that we took previous day low, and us taking out previous day low here means that I can no longer use the daily objective for a bias, right? And coming into the morning, that means I'm going to have to pivot onto possibly the 4-hour time frame, 6-hour time frame, the 8-hour time frame, or the 10-hour time frame, right? And so, like I said, coming into the morning, my best bet is to utilize the 4-hour time frame and this 8-hour time frame, which you're about to close in about 22 minutes or so. So depending on how those two candles close will give me a bias. Every single candle has a reasoning, has an objective, right? And so if this 4-hour candle and this 8-hour candle closes bullish, then I would assume that we are most likely going to take out the 4-hour high and the 8-hour high at that green line. But let's just say that prices closes bearish. If we were to close bearish, then I will be targeting the lows of those two candles. And that's essentially kind of the way that I'm going to approach prices today. I'm not really going to force anything to, I'm not going to force anything here coming into the morning. We are kind of in consolidation if you think about it. So from Friday, or like I guess from Monday of this week, we've been inside this like kind of box here, right? Up, down, and then we're still kind of in this consolidation. Don't really like trading consolidation periods. It kind of sucks to be in those consolidation periods, but yeah. So like I said, coming into the morning today, my best bet is to utilize the intraday time frames for a bias, right? So I'm just gonna wait until the 4-hour candle closes and the 8-hour candle closes for a bias. I do want to take a look at the economic calendar here with you guys, or not the economic calendar, my personal journal here, to go over some of the pros and cons. But yeah, hopefully everybody's doing pretty well this morning. It's been raining for like the past week or so, the past like 4 days. Which, I mean, I don't mind the rain. I actually like the rain. It's just for a long period, it just makes you gloomy. Alright, so to dive into the pros and cons for previous week and to some of the pros and cons that I can carry into this week, the first pro that I want to mention is to take consistent trades, right? For me as a trader, that's my number one value. That's, for me at least, I require setups where I can identify 3 components, right? A higher time frame objective, a model, and a entry pattern. Those 3 things should be present in every single one of my trades that I take. And whenever I do my reviews, almost every single trade is like the same. It's just not the same. You know, it's like it has the same template, but you know, every single trade is gonna be different. It's just it has the same template of the higher time frame objective, a model, and an entry pattern. A higher time frame objective is essentially the bigger reason why prices should be continuing in a certain direction. Imagine that as a large magnet. Your model is how you align yourself with the higher time frame objective. And for example, if your higher time frame objective was to take out the weekly high, then your model should be on the daily time frame, and the daily time frame should also be suggesting higher prices. You know, the daily model's objective could be to take out the daily high. And so the higher time frame objective is a large magnet. The model could be like a smaller magnet, right? Both pulling towards the same direction. In the example, higher prices. And your entry pattern is the reason why you are entering the setup in the first place, right? It is always going to be like, for me at least, it's always going to be a fair value gap. ICT has introduced a lot of, I guess, ways of entry. Could be an order block, could be a breaker block, it could be mitigation block, it could be any one of those blocks but my entry of choice will always be a fair value gap. I like the idea that fair value gaps suggests that there's displacement in the markets, because fair value gaps, leave behind these gaps, right? And those gaps are like suggestive of displacement, meaning displacement as in an urgency towards a specific direction. Once prices trades back into that fair value gap, we should respect that fair value gap, and the magnet should be drawing prices towards that objective, right? So the model and the higher time frame objective defines what fair value gap will be respected. Second pro here, knowing when to pivot.
Bye bye.
So second is knowing when to pivot. So like coming into the morning today, I knew that the daily objective has already been completed. So the best approach for me to do is to not use the daily time frame, but to actually utilize the intraday time frames, such as the 4 hour, the 6 hour, the 8 hour, or the 10-hour time frame, right? Every single time frame is going to have an objective. And this is based on the idea that prices is fractal, time is fractal, right? If you can apply the same concepts that I did with the daily time frame to the 4-hour time frame, what I mean by this is, is this candle, is the next daily candle going to take out the daily low or the daily high? If you can apply that same way of thinking with the 4-hour time frame and the 8-hour time frame, the possibilities are going to be endless for you. And yeah, so that's the second pro here, is knowing when to pivot. Third, utilize SMT as a confluence before a trade even takes place, right? So if there's a lack of SMT, then there's a possibility that prices should be continuing higher, right? And if there's no SMT, then that means, or if there is SMT, sorry, that means there's a possibility of a reversal. Here, coming into the morning, I pointed out that there's SMT here at NQ and ES. So ES, we've taken out this high, or sorry, this low. But NQ, we did not take out this low. And notice where once we had this SMT, this was a good time for when prices begins to reverse. And you can take a look at that. We reversed, and it looks like we might and could possibly be retracing back into the premium of this range.
Yeah, bye bye.
But yeah, so that's just utilizing SMT. And you can utilize SMT during a trade as well. So if you're targeting a specific high,
bye bye.
And if you're targeting a specific high here on NQ, and on ES, we take out the high. We take out that relative high on ES. That means that there's a possibility of SMT playing, and it allows prices to reverse. So if I see that ES has taken out its relative high to NQ, then I'm going to move my stops to break even, just so that I can prevent any unnecessary losses. And with that basically sums up all of the pros here. So consistency, knowing when to pivot, and utilizing SMT. That's going to be all of the pros for this week. Coming into this week, some things that I can continue to work on is making sure that my risk to reward when entering a trade should always be minimum 1-to-1. Usually, typically, on average, it's gonna be like a 1.25, 1.5, and this is essentially meaning that I'm risking $1 to make $1.25. I'm risking $1 to make $1.50. All right, and your maximum dollar loss limit, for me at least, is always going to be $100, or it could be $200 depending on if I'm taking it on the daily time frame. If I'm taking it on the daily time frames, right, then that means I have to allow for the bigger range, and bigger ranges tends to require a larger dollar stop loss, but that means that I have a higher take profit as well. The day margin requirements are going to be $100 per contract, meaning that my account has to meet the marginal requirement of $100 per contract. And so, for example, if I'm taking a trade and I'm taking it with 5 contracts, then my account has to meet the minimum balance of $500. Fees, some of the fees are going to, it equals up to about $1.12 per contract to open a position and to close a position. So around $1.12. And to sum up essentially every single pros and cons here, first, being consistent, right? I have to require those 3 components before I even execute a trade. Higher time frame objective, model, entry pattern. Second, knowing when to pivot. I have to pivot because, like I said, if a time frame's objective has been completed, then there's no need for me to be on that time frame anymore, right? And so I have to pivot. I have to utilize the fact that time is fractal, prices is fractal, and use that to my advantage. Third, utilize SMT before and during a trade. During a trade, if there's SMTs at the target highs on ES and NQ, then I'm going to move my stops to break even, right? That is how I approach trading, and that's just how I prevent any unnecessary losses, because SMT indicates that there's been manipulation in the markets, and if there's manipulation, then there's a possibility that we could reverse in a specific direction. All right, and last but not least, it is to really pay close attention to my risk to reward rules. 1-to-1 is my bare minimum, and I have to track the progress of my account balance. So I've taken 2 trades so far in my personal 10K account, and for right now I'm up $89, which is about like 0.86 or 86 basis points. Not even a full percentage point, but I have about the rest of the year to do my work. And yeah, so I want to track the progress of my 10K account, meaning I want to be able to journal all of the trades that I do take, losing or winning. And I'm going to do my best to try to remember to record myself during the trade. So, and the way that it benefits me is that I can see how I am mentally approaching the trade, right? Where I'm at emotionally, and how I'm able to analytically analyze the trade during the trade, right? And yeah, so that basically sums up all of the pros and cons and the improvements here for this week. It's about 8 minutes till 10 a.m. Eastern time. And with the way that we are closing, it looks like to me that we are most likely going to take out this 4-hour high and this 8-hour high. And notice how on the 4-hour time frame, it looks like we are most likely going to rebalance, or not, well, rebalance isn't the right term, but retrace back into the discount or the premium of this dealing range. So from this swing high to this swing low, there is a dealing range. If there are sellers in the market here, they're most likely going to want to sell within this green box, right? That's the place, that's the area where they will make the most profit, is selling higher prices. And so this green box could be treated as a big magnet, right? It's the higher time frame reason for why prices should be continuing higher. We haven't had the chance to trade into the premium yet, so it makes sense for us to give an opportunity for sellers to sell in premium. And so the way that I would align myself with that order flow, the higher time frame order flow of us retracing back into the premium, could be based off of the 4-hour model. And the 4-hour model is essentially me utilizing the 4-hour power of 3, and I noticed that the 4-hour power of 3 is suggesting higher prices. And that's kind of how I would approach this, right? If the 4-hour model is suggesting higher prices, then I just need an entry pattern, and I go into the 1-hour time frame and I notice, hey, this hourly candle here is suggesting that we should take out the 4-hour high within the next hour. This is because the hourly high is the same high as the 4-hour high and the 8-hour high, right? Knowing that the hourly high is the same high as the 4-hour and the 8-hour high, I could assume that we should take out the 8-hour objective within the next hour. So going from the hourly model now, because I can treat the hourly time frame as my model, simply because its high is the same high as the 4-hour high and the 8-hour high, I could go from the hourly to the 15-minute, and I noticed that there's this 15-minute fair value gap, or it looks like we are going to create this 15-minute fair value gap. With the way that we are closing here, I could treat this 15-minute fair value gap as a gap for expansion, right? And so we'll see. Well, actually, I'll give it some time. If it doesn't, well, now it looks like we're going to actually reverse, but who knows? Who knows? I'm gonna give some time for prices to do its thing. Not gonna really force anything yet, but I'll let prices close. I'll let the 4-hour candle close before I really confirm a bias. But yeah, notice how now the hourly candle here isn't closing bullishly, right? It's closing with a really, how do you call this? A really indecisive closure. And if it closes indecisively, then I will not really force an idea here. I'm not going to force a trade here, right? If it's a, I guess you would say, if prices closes pretty indecisively, yeah. About 3 minutes left until the candle closure here. Pretty indecisive hourly candle closure. So that means I can't use the hourly time frame as my model. Even though the hourly high is the same high as the 4-hour high and the 8-hour high, because we are closing pretty indecisive here on this hourly candle, I'm not going to force a model here, right? I can't utilize the hourly time frame because the way that it's closing, it's not strong or suggestive of higher prices. Yesterday's trade here that I took, or I wouldn't say yesterday, but 2 days ago, I got stopped out, or I got manipulated out before prices completed my objective. This is pretty interesting to me that we did that, but sometimes things like that happen. So I was anticipating for prices to respect this fair value gap and to continue higher. And here you can see that we manipulated outside of the fair value gap. After we created manipulation or SMT, this is a clear indication that I got manipulated out, right? Because of the SMT, after SMT we reversed and we ended up taking out my objective. Yeah, it looks like I'm probably not going to enter a trade here. Yeah, with the way that we close here on the hourly time frame, not very suggestive of higher prices or lower prices. It could be treated as almost a coin flip, and I don't like that it wasn't a I guess you can say confident candle closure. It's not suggesting higher prices, but it's not suggesting lower prices. No. Yeah, I think that's probably gonna be all for today's live stream, to be honest. I didn't necessarily have a daily objective coming into today. There is also PPI. PPI came in at 10 basis points higher, right? My best idea was for us to utilize the intraday time frames, such as the 4-hour, the 6-hour, the 8-hour, or the 10-hour time frames coming into today. And yeah, I think that's gonna wrap it up for today's live stream.